Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil markets. I'll start with Paris Rapeseed. The recent key feature has been the break upwards 6 weeks ago, which initially looked like an ascending broadening wedge pattern, but which deviated 2 weeks ago. Now, I had detailed 3 weeks ago what you could expect in the event of a break lower, and I quote, "A break upwards would be about €56 on top of the value of the upper trend line when it was broken. A break downwards would be about €65 off of the value of the lower trend line when it was broken. The only two other things to add is, firstly, don't force the break. If it stays within the pattern, then let it stay there, and beware of false breaks." End of quote. Hence, with this break lower, we could have seen a move down to the 587.5 area. However, as we've recently or subsequently seen, this market has made a false break lower. Additionally, in this false break lower, it had left the door open to some other possible patterns. Initially, I looked at the action over most of October, and especially since mid-September today, as a possible bullish halfway hesitation. This is a big if. But if that turns out to be the case, then we could see an upside target for such a move in the 730 area. It is still too early to be certain of that, though that particular avenue is disappearing swiftly. Another possibility is to look at the late September to date action as the beginning of a possible head and shoulders pattern. Now again, it's still too early on this one, even to label it, but I have drawn a prospective neckline, currently at 638 3/4, just in case. Please also remember, though head and shoulders patterns are usually regarded as topping actions, hence the word head and shoulders top, they also can be continuation patterns, as I've seen elsewhere. In recent days, we have started to see doubts up here, with the bullish patterns having limited or no follow through higher, and notably yesterday being a possible bearish belt hold pattern, one of the most aggressive patterns out there. So it suggests caution, especially as we seem to have little below until the proposed neckline. Yet I would also urge caution the other way, just in case the market rises up to that 730 area, or for whatever the next pattern may turn out to be. Winnipeg Canola. There are, as I've previously said here on many occasions, two patterns in operation here, both having run to fruition, and both fighting to have their results be the more dominant. We have a descending triangle from early July and a sideways triangle also from July. The upper trend line for both is the same, the May to date downtrend, currently at 843.20. The market broke higher over these 5 weeks ago. Now, for the descending triangle, we have a base on the congestion between 819 and 819.40. I have to add a caveat here. Since I first started to look at this idea, I have been underwhelmed. I'm not happy about this pattern and would rather have called it a smaller descending triangle from mid-August using the same downtrend for the ease of use and a higher base on the 840 area. Anyway, the second pattern, the sideways triangle, has, or should I say had, an uptrend breached 6 and 8 weeks ago, currently at 927.20. This breach was an odd one. You see, prices initially continued more or less sideways, then started moving along higher, up along the same uptrend. Indeed, until last week we'd never been separated from it, though these past 2 or so weeks have seen a more acute bullish angle of attack. Anyway, 5 weeks ago I gave some levels on the upside. These have either been proved valid or are still valid. Thus, to recap, for the new smaller descending triangle with an initial topside target X2 in the 930.80 area and a secondary target X3 in the 946.5 area. For the ragged sideways triangle with an initial potential target X4 in the 968 even area and a secondary still valid target X5 at the high of the market in the 1008 area. To be honest, I wasn't in love with any of the three patterns I'd indicated, but of the three I did favour the smaller descending triangle with an upside target in the 930 area. Anyway, targets X2, X3 and X4 have all been fulfilled. We now have only target X5 in a 1008 area still left unfulfilled. though the previously mentioned sharper ascent we'd seen in the past 2 weeks indicates that perhaps that soon may be in the frame. As for the downside, well, just keep a lookout for the extension of that uptrend previously mentioned, currently at 918.70. That seems to be the key to this move on the upside. Bursa Malaysia crude palm oil. First off, please continue to try and ignore the color changes on the labels. On the daily chart, there is no special significance to them, it's just my charting system playing silly buggers again. Anyway, 6 weeks ago, a gapping move lower finally halted just short of testing down to the congestion supports between 40.10 and 39.53. These supports had previously been bolstered by the rising long moving average, currently 41.91. This halt and reversal back up with a gap set the stage for the start of another move, a move I had intimated weeks beforehand. You see, the move up from the low to the high back 6 weeks ago gave us a weekly key reversal up that very week. Additionally, the follow-on higher 5 weeks ago, especially the gapping moves higher, gave us a rare monthly key reversal up here in September. So why were these so anticipated and important in my eyes, other than as their own standout patterns? Well, it's because a little while ago I laid out a scenario for a potential very, very large bullish pattern. It was to look at the whole of the May to date action, including the sideways weeks over August and September, as an extended V bottom. Now, this pattern is not that common, but it did and does have some heavy merit here at this time. And by heavy, I mean some really heavy merit. So to give you an idea of the potential for the move higher, let's look at the action since the low of July up to the high in August, as the size of the potential move which may happen. Thus, it is quite large. Plus, if you looked at the action as a further simple bull flag stroke bullish halfway hesitation happening at the same time, then it grows in significance. Yet if we looked at the larger extended V pattern, then it would not only have the backing of the June to date action, but all of the action since May. That is quite a lot, quite a lot. An initial idea on this just being a large bull flag stroke bullish halfway hesitation, well, that gives a potential target X in the 53.75 area. Originally way above the current top of the market and a very, very big ask. There is an even bigger secondary target for this pattern up in the 55.25 area, but I'm not going to go into that too much until we see prices testing target X. So far, we have seen a peak at 53.26, within spitting distance of target X. So that has been the scenario that we've been working under. Now, 3 final points. Two of them I've mentioned before, and a newer one. First is that the bullish Andrews pitchfork for the 2021 action, especially the middle time, currently at 50.16, has been and still is the main bullish incentive here. My drawings of this bullish Andrews pitchfork so many months ago had been a bit of speculation on my part at the time, but it is wonderfully still maintaining its validity and prominent bullishness. The second is the very recent mid-September to date bull channel. This seemed to have some merit, but 2 weeks ago the market gapped out of it on the downside, and we've not seen any real attempt to head lower after that time. Finally, the simplest and perhaps the most bearish of all the ideas is to look at the last 3 weeks and this week as a potential topping action. Again, it is still too early on this, and the immediate countering bullish opening white Mariboso and bullish engulfing pattern we saw just before Diwali does not help this as an idea, but you should not be immune to this as an idea. I will comment more on this one as I see things happen. I think I'll leave it at that for now. I can only say that what I've said this time last week and the week before again, and that's I'm hoping next week things will become more clearer. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final part.